What's up, you guys? It's Natalie here with NASDAQ. I want to talk about just general investing today. I get so many questions. When is the right time to invest? What should I buy? It's such a simple answer. It's really as soon as you can. As soon as you have money, you can invest. If you're younger, I don't know about being under 18. I think your parents can basically open an account with you. This is anyone 18 and over, really. Let's just talk about that. As soon as you're making an income, that is the time to invest. Now, I used to always be super excited about, I'm going to be a real estate investor. It takes so much money, tens of thousands of dollars to be a real estate investor. Now, I might get some real estate haters here saying, there's ways to get real estate with no money down. Well, in general, you need money to buy property. You just do. So that's kind of something I've stepped away from, and I'm going back more into the digital asset game. The stocks, those are, you can get some stocks definitely for cheaper, maybe $5 or $10. The big ones are obviously more like hundreds of dollars. I believe cryptocurrencies are their new emerging market, so they're definitely undervalued at the moment. Even with, for example, Bitcoin, you can just buy $5 of Bitcoin if you want. You don't have to own a whole Bitcoin. Same thing with other digital assets. Some of them are a few cents or a few dollars. If you only have $50 to invest, you'd actually buy multiple of that coin because it's only 50 cents or $1 or something like that. You see what I mean? You can just start by something that's undervalued and then wait for it in the long term to go up and up and up. You can easily, if something is undervalued, easily get 10x your money. With real estate, you have to put a lot in, and even right now, I feel like definitely the markets are a lot higher than they might be. I don't know. So anyways, let's look at a couple graphics to see kind of the difference it makes if you start earlier. I'm going to show you the difference between cryptocurrencies and the traditional stock market. A lot of people say to invest your money in mutual funds, ETFs, just buy the SPY. I guess I would say buy the SPY, although I feel like the stock market is insanely overvalued at the moment. Doesn't really make sense with the economy being so bad right now. The economy and the stock market, by the way, are not the same thing. The economy are basically, working class people. The stock market is more like bankers and the printing of money. That's basically what's making the stock market go higher and higher. Anyways, you get a 7% return on average with the stock market per year. You can get that in a day or a few hours in cryptocurrencies. It's just the cryptocurrencies literally can go up thousands of percent over time. The amount of time, there's not even enough data to say how long it takes, but it could be a few weeks to a year or something. You're going to see an insane amount of returns on cryptocurrencies versus the stock market, which I've been looking at trades lately. I'm not interested in trading the stock market because it's just not moving as much as the cryptocurrency market is. There's a lot more opportunity for trades there with the volatility, which can actually be a great thing. Some might consider it to be more risky, but in the long run, it's going to pay off a lot better. Let's get into it. Okay, you guys, so I want to show you this quick clip from Suze Orman saying you should invest more in your 20s than your 30s.
The younger you are, compounding of money comes into effect. You're 25 years of age, and you're putting $100 a month into your Roth IRA. And you're putting that money within your Roth IRA in a Standard & Poor's 500 fund. And over the next 40 years till you're 65, the markets go up the markets go down. But over all those years, just let's say, for an example, you average a 12% annual average rate of return. Do you know at the age of 65, you would have $1 million? But you think, I'm young, it doesn't matter, I can wait. What difference does $100 a month make? That's only $1,200 a year. Over 10 years, that's $12,000 bucks. What difference can $12,000 make? If you do then, starting the exact same thing that I said at $35, $100 a month, at the age of 65, you'd have only $300,000. Those 10 years cost you $700,000. So the younger you are, the more important it is, if you can, to put as much money away as possible so that that money can compound and compound and compound. The most you can put away, the younger you are, the better off you're going to be. So, you know, every drink you go out to a bar and have, or every time you spend money, if you compounded that all the way out, it's not $10, $20, it could be $50 or $100 every time you're having that, if you had just let it be in an account. Otherwise, what are you doing? You're peeing it down the drain. How great are you?
Ooh, she is good. Yeah, that's pretty good. Yeah, so basically she's saying if you invest $100 a month in a Roth IRA, 401k, etc., you would have only $300,000 by the time you reach 65 if you start at 35, or you would have $1 million if you started at 25 for $100 a month. So this book looks good. I may actually go read it. Nice. So, okay. I want to start here with the investment calculator, calculator.net. I put in starting amount $10,000. I felt like that was reasonable. If you don't have that much, you should probably at least save that much and then invest it when you can. So yeah, obviously listening to Sue's there, yeah, she said start as soon as possible. So that's what we're trying to do here. So, okay, $10,000 after 20 years, 10% return rate. That's average what the stock market gets. And then additional contribution of $5,000 per year. Could be more or less, totally depends on your financial situation. So if you calculate that, then let's see, yeah, she was saying this is only 20 years, so that's not necessarily related to Sue's, because that was more like 40 years. But you can see here that the interest does absolutely compound on itself. Start out at $9.99 for a year. Again, that's basically 10%, or $1,000 is 10% of $10,000. And then over time, all of that interest has actually gotten you closer to $30,000, along with your annual contribution. So yeah, that's a pretty big amount of money. Because each year, once you actually add the interest and your other amounts on it, you your money is obviously growing a lot. Wow, do you see most of that? Oh my gosh, yeah, $243,000 was your overall interest in the 20 years. Because this is, I guess if you add this up, that's how much interest you're getting per year. So that's pretty insane. It looks like if you see here, your actual contributions were a lot less than your overall interest. And this return on investment, that's basically what I'm going to show you later on. I mentioned this in a video where I'm going to go over the charts and just exactly how you're going to get return on investment and the differences between cryptocurrency and the stock market. And then finally, just kind of wanted to mention that a lot of people out there, like Sue's or Investopedia even, they don't mention cryptocurrencies. I've seen Tony Robbins' books he does mention a lot of older financial instruments that, especially like the bond market, it's nothing what it used to be like decades ago, and these days it's just like it's basically dwindling. Whereas cryptocurrencies are a completely new asset class, and they've outperformed everything. That's not an exaggeration. It truly has. Bitcoin alone is essentially the biggest asset that there has been. So basically, just something to keep in mind is that you have to keep yourself educated on where your money will actually be better off. Everyone's going to tell you Roth IRA, 401k, etc. That only gives you a return based off the health of the stock market, which is, I guess it's fairly consistent unless there are crashes, like for example 2008. But so that's going to give you an average return, where you're going to have to wait decades to actually make any good money off of your investments, and that's only for your retirement account. It's like you don't even get to live off of that money at that point. But cryptocurrencies is truly incredible, the amount of returns that you can get with them, and how that they're very undervalued right now. A lot of stocks right now they're pretty expensive. The cryptocurrencies are just starting out. So I definitely recommend checking it out, and even see for yourself if you buy $100 or something, like how it'll actually go really far in the future. So thank you guys so much for watching. Please like and subscribe, and let me know what you want me to cover next.